Good evening, everybody. It is time for the Daily Factor Show. I'm watching the Longhorns right now. That's why I'm having the show on a little bit early. I want to get this show done so I can watch the rest of the ball game. It looks like Chad's in the house, and he says I'm here, but I ain't. Hook him. So I think he's watching the ball game too. He probably just left a comment. And that's fine. I understand that. Anyway, closed-end funds aren't my favorite subject, it's not really my favorite subject anyway. But I figured we just get this over with and do it now. Then hopefully I can, watch the last three quarters of the ball game. But Texas just walked onto the field. Kickoff's in like probably 15 minutes. So, Jackson, what's going on, buddy? What do you want? I don't know what you want, buddy. Jackson, why did you bring me this bowl? I don't know why you did that. Do you want a treat? Who wants a treat? Is this what you want? Is this what you want? I don't know, Jackson. You have to come up here. All right, buddy. All right, let's get this show on the road. So it's Daily Factor. And also, I was going to say, we can also look at I didn't have an end-of-day live stream. We can look at, the usual stuff we look at the end of the day. If you guys want to, maybe you guys are watching ball games too. I figure people are with their family and stuff watching ball games. I have closed-end fund CEF Connect up because last week you guys told me that's a better source for looking at these closed-end funds. All right, so let's get there's only four of you guys here, so there's not a lot of for one thing, I usually do this later, but I figured we would do it earlier and combine the afternoon show and this one into one. So let's look at the yield. Let's go yield chasing. The first one is SWZ. Of course, I have no freaking idea what that one is. I don't have any idea what any of these are or how they work, but I put these in here for you guys. I mean, they are income funds. And total return securities fund, huh? Okay. I'm still not sure. I don't like FinViz for looking at just being able to look at stuff quick. I understand that this has information FinViz doesn't have in it. I mean, I get that this is, this is better, 70% or 70 basis point management fee. Distribution history, whatever. I mean, what went on right here? They probably had a huge payment. I bet they paid a huge payment. It came out of NAV, and that's the reason for that. Maybe they had a one-time special payment or something. I'm going to have to look over here. I just prefer this for just a quick look. As you can see everything on the screen, and you can see where they made the payments. And they did make one giant payment for $3. Yeah, no wonder. That's why it dropped so much, because it was trading at 6 and it dropped, within a day or two it should have dropped $3. But anyway, like I said, I don't really like these. I mean, I don't really understand these, but yeah, there's the $3 drop. It was, it comes out of NAV. They all come out of NAV. That's what I'm saying. It doesn't matter if it's closed-end fund, covered call funds. It doesn't matter when you're paying a large distribution and it comes out of the NAV. I mean, I get that in covered call funds option it comes from option premium, but every option trade doesn't win. Some option trades are losers. They win some of the time. Anyway, it comes out of NAV all the time though. So, and that's the way it is here too. So in any event, total return securities fund, that's kind of a generic name. It's only a 3.28% dividend. That one's definitely not getting dealer's choice or editor's choice. OCCI. Okay, let's look at OCCI. What the heck is this one called? OFS Credit Company. All right. Well, at least this pays a good dividend. It pays 27%, but of course that's why it goes down and to the right. There's no way to pay that high of a dividend without without depleting the NAV, and to some degree. So that we'd expect that. That other one went sideways, but it just paid 3%. So you can have it. It's your choice. It's your money. You do whatever you want with it. All right. So Let's check out the next one. But yeah, I like that 27%. On this SWZ is saying 54%. All right. It's because of that big one-time dividend. It was trading at like $10. It paid $3 out. That's like 30% right there. Then it had another dividend too. So anyway, ECC. Some kind of credit thing, Eagle Point Credit Company. All right. What does it pay? Pays 26%. Sure enough, goes down and to the right. Just that's the way it works. That's the way it works. All right. So we have GGT. GGT is, I don't know. Oh, Gabelli Multimedia Trust. Okay. Well, looks like they pay monthly about 24%. Goes down and to the right. So once again, we'd expect that. BCAT and ECAT. BCAT is BlackRock Capital Allocation Term Trust. It pays 23%. It doesn't go down and to the right too bad. A little bit, but not too bad. And then we have ECAT. ECAT is the, ESG, okay. The ESG Trust. So this one pays, what, 22%? All right. What else do we have here? Okay, GOF, that's the Guggenheim Opportunities Fund. See, I know about this one. This one pays 17%. And yeah, see, I remembered. I'm getting to be a pro of these after all. All right, Guggenheim Strategic Opportunities Fund, down and to the right. Does pay 17%, though. It does, just the high yield doesn't make it go down and to the right by itself. It can also be invested in an underlying that's, same thing as these covered call ETFs, but a high yield will almost always cause a down and to the right, especially over any amount of time, just because. All right, so CLM, CRF, we know about those. Let's look at the charts, though. CLM, CRF, they both pay around 17, and I realize there's rights offerings and stuff, but looks like the game started already. I thought the game was going to start at 7. The game started at 6:45. Anyway, whatever. All right. CLM goes sideways across the screen and pays 17%. It did drop from 9 to 650 during April. That's $2.50 on 9. That's a gigantic drop. That's 30%. So, I mean, everyone says these are steady and stuff. Well, I mean, unless the market goes down. Same thing with these covered call funds. You can get the steadiest one in the world, and they're going to go down if the market goes down. Especially if it's the sector of the one that's investing in, and especially if it pays 50, 60, 80, 90, 100%. All right. CLM, CRF. Okay. SRV. I forget what this one was called. SRV is the NXG Cushing Midstream Energy Fund. So oil pipelines go sideways and for the most part pays 13.1%. All right. Great job there. We have FACTS and FCSO. FACTS is the Aberdeen Asian Pacific Income Fund. Goes pretty much sideways. Now, it didn't lose as much as CLM did in the pullback. CLM got drilled in the pullback. CLM lost twice what the market did. I think the NASDAQ was down like 17%. It looked like CLM was down 25 to 30% in the last pullback, just for what it's worth. All right. Well, this thing's, pays 12%. So at 12%, you might have a chance of getting some NAV upside. All right. Depends on the underlying, though. So that's that one. And then we have FSCO. FS Credit Opportunities Trust, probably distressed loans and stuff like that, if I had to guess. Well, it's been getting hurt lately. It peaked out this summer at 740 and it's down to 620, $1.20. Yeah, that's a pretty big pullback. All right. Then we have, now I know YYY is an ETF and so is CEFS, but they're ETFs that have closed-end funds in them. So I've included it, but I realize it's not a closed-end fund. It does pretty well though. Generally, YYY is not a bad looking investment. Sometimes. Now this thing got hurt really bad in April as well. It dropped 20%. All right, it only pays 12%, so that a little bit of chance of upside. ASGI. This one win last week. This one's a really good one. Oh yeah, Aberdeen Global Infrastructure. Okay, well, yeah, this one goes up and to the right, pays 11%. So that's awesome. That is a good looking one. That's the editor's choice right there. I've already picked it because I like upside. CEFS and UTG. Now I'll keep an open mind. CEFS. Oh yeah, well, CEFS is from Saba, and it's a fund of fund. It's a ETF fund of funds with closed-end funds in them. And let's see what their biggest holding is. Now that I'm an expert at closed-end funds, look, their biggest holding is ECAT. I know all about ECAT. And they also have a little bit of ASA, a little bit of GDX, which is not a closed-end fund. That's an ETF. But anyway, and then they have some other closed-end funds, GDVs, closed-end funds. You guys get the idea. All right. Well, that's not a bad-looking one either. Only pays 7%, though. I like that. I like the looks of that Aberdeen paying 11%, or paying 11 or 12%. So we'll see. We shall see. CFS, and then the last one is UTG, whatever the heck this one is. UTG. The Reeves Utility Income Fund. Now, this one has a good look to it as well. It appears to be a growth asset. Didn't get hurt too bad in the pullback. It's down less than 10% instead of some of those other dogs that were down twice what the market was. Only pays 6%, though. It's part of the reason its NAV is good. And the other part of the reason is because whatever this is doing well. All right. So let's go back over here. So let's check out the NAV return for the quarter. It's got to be ASGI, right? Of course. I mean, it's gone from 1968 to 2038. It's 7% up on the quarter. UTG looks good also. CLM, CRF, of course, and CEFS looks good. YYY is, flat, has flat NAV, and it's making about 12% yield. And then we have SWZ. All right, so let's look at the stable decks, see which ones are the safest. And CEFS, 62% more stable than the SPY. That's really good. YYY is also a very safe alternative. I mean, it's 1.3 times as stable as the SPY. Then we have SWZ, RIV, BCAT, FAX, CRF, CLM. CRF and CLM have about the same, have a little bit less stability than the SPY. They have about the stability of the NASDAQ. That's not too bad either. It's not the ones you want to watch out for, in my opinion, are the ones that just totally lack any stability, like this OCI. This is 3 times less stable than the broader market, or 3 times crazier, however you want to look at it. All right, let's look at the sustained. This is the max factor. Number 1 is going to be ASGI, and that's also editor's choice, of course. I mean, it gives you 11% yield plus positive NAV upside. I mean, it's been having a great go, but you could make a case that CLM's better because it pays a higher yield, but it has less NAV upside. But kind of the tiebreaker probably is that, CLM isn't as stable. Well, actually, they're both about as stable as each other. They're both a little bit less stable than the overall market. But any of those could work. CRF's good from what I've heard. CEFS, I've heard good stuff about it. And this thing has massive stability. Number 4, 62% more stable than the broader market. It only pays 8%. but and the NAV's up 1.6%. Not a bad looking one. So anyway, thanks for being here for the daily factor tonight. All right. So I didn't do an afternoon report. If there's anything you guys want to talk about or look at, we can. What's going to happen on Monday when Yulmax does a split? Off topic. Oh yeah. No, that's fine. That's fine. You put a stop order on your Tesla, what, like a stop loss or something? I wonder how they'll handle open orders. I would think an open order would just split also. So like if you have a stop loss at, 2 and the stock's trading at 250 or the stock's trading at 3, then it does a 10-for-1 reverse split. Your stock will be trading at 30 and your new stop loss would be at 20, I would think. But yeah, I don't know what's going to happen. I think everyone that wants out is already out. I mean, it's, I hope they are anyway. There's a lot of people that, that didn't really realize what they were getting this summer. What's my favorite CEF? Okay, well, I don't know much about him. I'm just learning from you guys. I'm a covered call guy. Never owned a closed-end fund. Don't know anything about it. But from the max factor, I mean, from the data, you have to like ASG. You have to like Cornerstone, of course. But ASGI, CEFS, and I really like YYY also. I think it's a cool ticker. I know those aren't closed-end funds, but it has closed-end funds. If I want a closed-end fund exposure, I'm not going to keep track of when the rights offering is and be able to, do a thing like the income factory. That's not my lane. I would just get CEFS or YYY and let the professionals handle it. But let's see what YYY has in it. It has other closed-end funds, Tekla Healthcare, BlackRock, anything that's not in blue, I think is, well, some of the blue ones are closed-end funds also, aren't they? Or those ETFs? No, that's a closed-end fund. I think the white ones are just private investments that aren't even listed, private equity or whatever. But anyway, they have, as far as the stuff we can see, these guys have WDI, which has been doing poorly. It looks like ECAT. And now this is another Aberdeen fund we have, and this one wasn't in the survey. It probably needs to be. But we have AOD, and then we had ASGI. So let's look at AOD really quick. This is how I learn about closed-end funds or about any investment. Just, look at the numbers and then just kind of do a little research. But I would say, to answer your question, based on what I've seen, and well, based on what I've heard, it has to be Cornerstone. But based on what I've seen, it looks like you can make a good case for Aberdeen or one of the ETFs that do the fund of funds. All right. So, this is that's a good looking fund. Total Dynamic Dividend Fund. Okay, well, we need to put this one in the max factor. It pays 12%. How did it protect capital? Hopefully it did better than CLM did. I didn't realize that one got hit so bad in April. Lots of other stuff got hit too. It's fine. It does a great job day in and day out. All right, so what does that say? I can't read. Is that, it's 877? All right, 877 to $7.70. Yeah, about 20%, 22% or something. Not as bad as other ones, but yeah, it looks like it pays a decent dividend. It pays monthly. Let's see if they're consistent. This is my new favorite closed-end fund right here. AOD pays 10 cents every month. They probably announced it in advance, so it was 9 cents there. But the NAV was increasing. Probably as the NAV increases, just like the opposite of the way Yieldmax works. As the NAV decreases, that pays a lower one. This one, but not all Yieldmax ones work like that. If you can find a Yieldmax ones where the NAV increases, and there are some, the ones that pay a lower yield, they have a chance of doing this also. But that's really cool. That's a good looking fund right there. I need to put that one in here. All right. Well, anyway, how are you doing, Bikerman? Mayor's in the house. Hey, Mayor, what's going up? Yeah, I know it. We're having closed-end fund Saturday night. Oh, I mean, but I hear you. You're responding to what I was saying. I'm with you on that. Brad's here. Brad, yeah, I need to put this AOD. And Brad, I know you sent me a list this week, but I just wanted to get this show done. And so I just went with last week's list. But I know I have a better list in my inbox of some better funds. Hopefully this AOD's on it. This thing looks pretty good to me. I like the looks of that. it doesn't look, if you didn't see it today, Mayor, it's not in the mix because I mean, there's thousands of closed-end funds, and I'm not trying to turn into a closed-end fund show. This is a curated list. Me and Brad have curated the list. No, but I'll put it in there by request. I mean, if it looks good, what is it, AEF? But really, this thing's more suited for the super high yield covered call strategies. Yeah, I mean, that's a good looking one too. It's Aberdeen also. I need to go through and put every Aberdeen one in there. Obviously, Aberdeen looks like it's the Neos of the closed-end fund business or whatever. You know what I'm saying? Yeah, I know it does. And I was on CEF history, but I just don't like it. That was where I started. You can't tell. It's not, to me. Distribution's okay. There's so many tabs. This didn't do anything for me either. This was the first fund I looked at. Oh yeah, I paid a special $3 one-time distribution. Anyway, for me, I'm just a visual guy, and I just thought the chart didn't look that good, and this right here shows me everything I need to see. And I saw the special distribution right here at $3, but they had a cruddy line chart that makes it look like the price just fell off a cliff, and it did. I mean, from here to here, but the bars are just better. Yeah, I like this better. I mean, I know for specific closed-end fund stuff, you have to go to CEFS, but for me, just trying to find out the name, when it pay, how often it pays dividends, and the rate. The problem with this one was, and I need to take it out of the max factor and put in AEF instead, and AOD. It really doesn't pay enough. It only pays 3%. Well, but actually it pays a lot more than that. This doesn't include the one-time dividend, is what that is, for whatever reason. I don't know why it doesn't though, but yeah, it actually paid when you include the one-time, but it's just, that one's not a good fit for the max factor. Oh, it is. Okay, good. I figured as much. I'll make it better next week. I should change the time frame on CF. Oh yeah, I see what you're saying. I just also had a hard time seeing the chart. Okay, so let's see here. Performance. I mean, that's cool. You can't see that on the other one. That looks like a chart I would do. That looks like my buffer report or something. Fund basics. This overview was just, I saw this and I was just like, you got to be kidding me. I mean, yeah, that looks a little better there. I still prefer the way the other one looks. But like I said, I realized that there's only some information that you probably, this kind of stuff that you have to get on here, stuff that's specific to, to closed-end funds. I get that. Equity, single country equity and all that. But anyway, I was unimpressed with SWZ, but I'm really impressed with this one, AOD. Anyway, but yeah, BR says it's on the list. But anyway, the list will get better next week. So Aberdeen made you mad when they just liquidated FCO when the premium. Oh, really? I hadn't heard about that. FCO. This one pays special. What happened to this one here? It doesn't look like that's not a dividend. The dividend's right here. Boy, I mean, anyway, whatever. That's probably that when they liquidated it or whatever. Or, I mean, did they do something there? Or Aberdeen Investments closing fund announced distributions. Aberdeen provides update. Anyway, oh, you hit the like button. Hey, thanks, Kevin. I appreciate you. Liquidation credit to sell off. I got you, man. That'd be a nightmare. That would be a nightmare to be stuck in that one. I'm just more comfortable with ETFs because they trade more like stocks. They actually really don't though, but they don't trade on supply and demand. They just print more shares or destroy the shares. But anyway, I'm just used to talking about those because that's what the covered call funds are. Let's see what else I have to show you guys. I might have something else you guys might like to see. This is how my own portfolio was doing. I pulled this. I think this is after the close. It could have been like at the end of the day, but and this is also my current weightings. Look, YQQ's up to 13% because the market went down for a couple of weeks, and that one did a little better. And also because, these other ones were bleeding because the market was going down. So the proportions changed. This was like 12%. And this was like 13%, but this one sold off and this one anyway, whatever. Anyway, whatever, but I thought we might want to see. So this just shows the days change. And is that percent? Okay. Yeah. So K yield was up 1.7, blocks 1.7, WPay 1.1. Heck yeah. Salty was, down a 1.5, but darn it. Anyway, whatever. All right, I have other stuff to show you guys. Yeah, the premium went away. I got you. I see, because of course, that's the other thing, because it trades to premium and NAV. That can never happen on ETFs, because if it's in real demand, they'll just print more shares. ETFs don't short squeeze. I mean, if everyone sells an ETF, it'll shut down, but not because it runs out of money, just because it won't be worth it for the trader to use it anymore. But ETFs are way less like Ponzi schemes than stocks are, because little stocks like penny stocks and stuff, they rely on somebody else buying it from you, or the whole thing collapses. That's not the case on ETF. Not that they can't shut down ETFs, but anyway. Okay, you've been buying, Kevin, you've been buying feed also. Okay. Well, I'm not a big fan of feed. You probably hear me go on and on about it, but anyway, but don't listen to me. I bought Salty, a week and a half ago, and it's been killing me the past 4 days because the market's gone straight up. So don't listen to anything I say. And speaking of that, not financial advice. Do your own research, get your own planner. It's a lot better than just listening to some guy on social media. All right. So, but yeah, maybe feed, who knows? I mean, what my recommendation with feed is, well, one, I might recommend 5E because you actually get shares of the stock also. So you're uncapped, you're on, 40% of the portfolio is just shares of the stock. And of course you're going to get less yield, but anyway, whatever. But they have the same 5 stocks. But the other thing I recommend is that you like the 5 stocks that they have, because they don't trade very often. That was my problem with them. They don't, they might keep one a long time after it goes cold. They use technical analysis to rebalance in pointed figure charting. I'm all down with momentum, and I get all that kind of stuff. But, okay, so right now they have RDYY. What's RDYY? Oh, Reddit. So they have Reddit, Infly, Hui, Palti. Look, everything they have is getting murdered. I mean, yeah, maybe a good time to buy the dip or whatever. I'm not talking, but I'm just saying, but that's the thing. They get stuff and they hang on to it too long. I mean, when do they want to buy Reddit? When was there any positive momentum in that one? I mean, how did that get on the positive momentum chart? I mean, I just don't get it. In fact, when did that one get on the positive momentum chart? I mean, anyway, I don't get this. I had it myself, and I just don't get it. I guess maybe these, maybe they have positive momentum compared to the rest of the YOMAX universe. Oh, for one thing, these charts don't show dividends. So that's not really what it's really doing. Okay, well, so of course they're all down and to the right. All right, well, actually, because Palti has had good momentum. And look, Palti even went sideways for a few. Palti's underline was up so much. This proves the point I'm trying to say, or the point I'm always talking about, that there's no free money. And when you have one of these that goes sideways, it means that their underlying basket had to be up 50 or 60, 80% or something. But because even being capped out and even paying large distributions out of the NAV, they still have enough NAV left to go sideways. And God forbid to get one of these to go up. You can do it, but you have to have the underlying go up like 200%. Like I bet if we looked at this right here, I bet Palantir was up. There's no telling what Palantir was up to make the fund go up 50%. Palantir was probably up 200% right there, 250%. Just the math of it. In fact, let's look at that. That might be interesting. That might be interesting. Yeah, Palti has been a good one. Huey, Gooey. I mean, good because anything where the underline's hot. Trading View. I thought I had Trading View open, but all right, let's check this out. Let's get on the super charts and let's look at Palti, and then we'll overlay Palantir. But yeah, and you still know if you have an ETF that's paying 80% and the NAV's going sideways, that, I mean, you know, or I don't know, this one may even pay more than 80%. Okay, so let's overlay, let's get rid of this, or let's just do this. Let's put Palantir here. All right, so Palantir went from 39 to 82. So almost 30, 60, 90 would be triple. It's like it's up 250%. And it made this thing go up from 50 to 90 or 50 to 80 or 50 to 75. Made this thing go up 25 or 50%. So that's, you know, that's about how it works. And then I bet you when it's flat, you know, anyway, as long as everyone's okay with that. I mean, that's just the math of how they work. And you know, it's still doing pretty well if the NAV's going flat. Of course, you can see right here, just like any of these other work, just like Alti worked whenever Bitcoin turned down, Palti's been sucking lately because its underlying is down from 208 to 150. What is that? 60 points, 6, 12, 18. It's 15% or whatever. So I bet this thing, you know. So anyway, yeah, look what flat NAV cost. I mean, just to have NAV flat in this one, let's go from right. Well, so you can see the market's it's been in a steady uptrend to make this have flat NAV. Anyway, all right. So, I mean, I'm not saying, I mean, feed 5e, maybe if you like those stocks that are in it, it's going to pay the yield. It's just a fund of funds. If you like those 5 stocks, it's nothing magic they do. My gripe with them was I was hoping they would switch those 5 stocks in and out faster. That was my only gripe. But yeah, if you like those 5, in fact, I don't have any problem with, I mean, Palti, I mean, you're just buying something that has Palti in it. That's fine. I mean, Palti's awesome, you know, Huey, whatever. Absolutely. Yeah, Bikerman, I don't know if they really publish theirs, and I don't track them. I mean, I probably could. It'd probably be more like for a video. But we could look really quick, like it's something like this. I mean, I know generally what they do. But let's look at. But Howard does some kind of interesting stuff. I don't think it's something where I could just open it up and tell you. Look at this assets under management. This thing down here. I mean, it just blew up. Went from 2 million to 36 million. I mean, that's a pretty short time, August. I mean, you know, because Howard, he doesn't have the marketing team behind him and stuff like some of these bigger companies do. And also he pays monthly. That's strike one. He pays a low yield. That's strike two. And I know a lot of you guys like him because he's super steady. And I do too. I mean, he's a really smart guy and that kind of stuff. But that's strike three as far as bringing assets under management. To bring assets under management, you need to pay like an 80% yield. You need to, you know what I'm saying? You need to have massive marketing behind you. And also, there was a third one also, but anyway. But yeah, I mean, if you prioritize NAV retention, Howard's the man though. So let's see what they have. So here's okay. And this is pretty standard. It looks like they have some ETFs, it looks like, or no, they don't. Call. Yeah. Oh, I see. All right. They just have synthetic. They're using options to create synthetic stock. And Howard did mention on the show that he uses a little bit of leverage. But then he sells an out of the money call, and he said this on a show, but he sells a super far out of the money call, so as to get as much upside as he can, and he uses a little bit of leverage. And so, yeah, he's buying the in the money calls on gold options. So that's like a substitute for stock. But then, and he has 3 different tranches of them, but then he's selling this see right here, this 389 call, that's a short. And there's probably 3 other shorts. There's one that corresponds with each of these longs probably. So it's just a cover call strategy. But the reason he gets extra upside is because look, he's long from 250, 300, and he's short at 389. Or so even if he's long from this one, he's long from 310 and short at 389. That's a giant amount out of the money. I bet he also uses monthly time frames instead of weeklies, and that's why he just pays monthly. Yeah, no, this is a super good. I'm sure it's a super good one, but I think he's using options to mimic stock and then just selling options on options, which is that's the way I prefer to do it. These people that want the actual stock in the portfolio, I don't think that makes a bit of difference. I think it's better with the synthetic, and you can tell when they use synthetics because they have a lot of treasury bills. If they have the stock, they couldn't afford to have half the account in treasury bills because they're using just a little bit of leverage. But yeah, it's the same thing. He's long silver at 34 and 42, and then he's short at 49. He's just doing synthetic covered calls on the ETF. Man, that's a great looking chart. Wow, that's a move right there, isn't it? That is a massive move right there. I'm trying to think if I'm up in this position. I thought this position was doing badly for me because I bought too high. When did I? No, I bought it I bought it like November 10th or something. So, somewhere in here or whatever. But anyway, until recently, I was just barely treading water. But heck yeah, I like that. So that's all he's doing. That's all he's. But if you're new to options, you probably wouldn't have. That was kind of an advanced stuff. But I'm just saying, people use options to replicate stock, and that's what he's doing. The advantage is you get leverage, and even if you don't use the leverage to be super risky, I'm not saying Howard's being risky leverage. He's not like triple leveraged on margin. I'm not saying that. He'll make those options replicate about 120% the move of stock. So he'll add just a little bit of leverage, and then he'll go super out of the money with the call. So he has a lot of upside, gets a little bit of income, and it's super steady. But I wasn't trying to imply that he's being anything dangerous. He's using smart leverage, and I really think Roundhill is. Anyway, Max, compare what I said about QLDY. It beats them easily. Well, yeah, okay, I know it, but I wasn't trying to trash this one. I was just talking to my experience. But I'll read what you said. I mean, I read it. I just didn't put it on the screen. But yeah, QLDY beats everything. That's like saying Mike Tyson can beat up my sister. Of course he can. You know what I'm saying? I mean, he can beat up anybody. But no, yeah, of course. Those haven't performed well, but I don't know. I'm not here to tell Biker Man. I mean, maybe Biker Man is trying to buy the dip. I mean, thinks the whole market's down, or maybe just wants exposure to those 5 stocks. I'm not saying they're going to do bad in the future. I was just explaining why I didn't like them. But yeah, KYLD beats that. And I bet you, and then GPTY probably beats KYLD or whatever. There's tons of ones out there. It looks like KSILF is beating everything right now. My gosh, you don't usually see an ETF gap up 3 days in a row. That's insane. That is insane. But I mean, Howard knows what he's doing, because let's go back to that really quick. I'm really interested in that now that he was selling those gold options so far out of the money. When I say he's long from some point, when you own a call, you're long at that point. I mean, you can think of that way. So if you own a 200 and you sold a 250, you're long 200, short 250, and you could think about it that way. And the reason I know that is because I heard Tom and Tony explain that. I mean, that's the way that market makers think of it. Anyway. So, all right. So this thing, okay. So the options he bought were deep in the money. Remember, they were a 250, a 300, and a 310 or something. And then the option he sold was a 389. I also noticed the option he sold was in this week, and the options he owned were in the month time frame. So that's another little strategy. That's called a time spread. or a calendar spread. But anyway, Howard knows what he's doing. Those are some cool strategies. But man, this his gold gapped up 3 days in a row. I mean, that silver looked amazing. Let me go back. Let's go to K Gold. I mean, yeah, it doesn't look nearly as impressive as silver. Anyway, Tom Lee said silver was the new gold, or somebody did. All right, but yeah, I agree with you on QLDY. But let's look. Speaking of QLDY, let's do this. I have the graphic up. We can look at. We should be able to look at the. Gosh darn it. The diversified divas. Let's see here. History, the daily factor. Well, gosh darn it. Anyway, but it's in, I guess we could look at it this way. Hang on. Maybe it's in a window behind the window there. Oh, there it is. I just saw it. Diversified divas. Yeah, I wanted to show this to you guys. All right, so we finished the day out. And yeah, speaking of K-Yield, yeah, K-Yield's awesome. Out of the diversified divas, the K-Yield was or QLDY is awesome. Anyway, K-Yield won the diversified divas today. ULTI from Rex was up 1.19. Blocks is up 1.5. ULTY was up 3/4 of a point. The Qs were up 81. Let's see if the QLDY beat the Qs. GPTY only got 86 basis points. LFGY did well, of course. QLDY was up 1 point. Yep, it beat the Qs, 1.05. Yeah, and if we look at since inception return, rolling total return, this is as of up to date. I don't know where the good graphic is on this. That's the one I lost, but this is up to date. Look at this yellow line. This is ULTI. This thing's come roaring back from down 34 to down 27. Of course, the market's been straight ripping. It's the way that, all of them have come back because they're anyway. But blocks is getting, only down 18. ULTY is only down 13 after today. LFGY is only down 14. And then we have QLDY, the one I compared to Mike Tyson, or this is Evander Holyfield. Of course, it can beat everybody. It's a monster. Anyway, yeah, it's only down 1.95 for the month, whereas the Qs are down 1.5. I mean, we'll see how well it does on the upside. We haven't really had much, but I mean, it's a good-looking fund. But also, we have some other good-looking funds on there. Look at WPay, only down 8.6 compared to those other ones. That's pretty dang good, right? And look at K-Yield, only down 7.37, a little bit better than WPay. But compared to LFGY and some of these other ones, K-Yield looks good and QLDY looks good to me. Do you guys have any of those? Let me get back over here. I'm sure you guys do. Yeah, K-Silver's incredible. Basent beats Tyson. Silver is pumping. Basent versus Elon. Yeah, I know it. That's crazy. I know it. I can't believe that either. Yeah, anyway, I hear you. I'm not, like I say, I'm not trashing you for getting, everyone has to make their own decision. I just was saying I didn't like, I didn't do it anyway. I hope you make $1 jillion on feed. But have you looked at 5E? 5E, I mean, I just like how 5E owns the stock. But anyway, let's look. Let's look at those. That actually brings up a good topic. No, start it. All right, there's Feet versus SPY. I mean, it's definitely pulled back a lot lately. I mean, I don't know of any other YieldMax funds where the total return's negative. I just don't know what they're doing with this thing. I mean, well, there's one, okay, Murray, and there's ones with total return negative, but a diversified fund where the total return's negative, I mean, over that long of a period, I mean, you know, Chippy, Soxy, Biggie, I mean, look at Biggie's total return. I mean, you know, it's 23%. That one's a really good one, though. But I mean, there's some single stock ones that are down, but just to be a diversified fund and down, it just wasn't what I was expecting. But let's compare it with 5E. Let's see if it was better to own stock. And let me think about this. It's not going to be on the way down because you own stock. You don't even have any buffer. You're going to get the full downside on 40% of your portfolio. So I bet actually 5E has been a worse trade lately. But if it goes up, I'm saying I think 5E might do better, just like it does worse on the way down. We'll see. It looks like it hangs right together. Yeah, wow. Doesn't look like the stock makes a big difference. You did see on the way up that the stock pulled away a little bit because they were uncapped. But on the way down, it didn't do what I predicted. It didn't lead on the way down. I think it could, but it sure didn't. Anyway, WPay is a good looking one too. Well, I mean, okay, but I'm saying it's doing, when I say good looking, I mean, it's comparing well to the other ones. It's beating about half the field. You know, it's beating, and it's hanging with K yield. That's what when I say WPay is doing well, that's what I would expect. We need to put YMAX in there to have something that equal to compare it with. And then I could put YMAG and Maggie in there. But then at that point, it's just, I don't want that many. I just want the main ones that I think are good. QLDY, WPay, ULTI. I think it has potential. I know it hasn't been good. ULTY, Blocks, Chippy, and GPTY. I think that's a pretty good field there. SLJY, we can look at it. We can darn sure look at it. I bet it's let's look at it against K-Silv. I realize one's miners and one is not. One's the commodity. So the miners probably should do better on the way up, worse on the way down. And it's been up lately. So I would guess the miners did better. And I was wrong. Howard's killing it with K-Silv. Look at that. Look at that. And what happened, it looks like the miners got hit worse in the pullback, at least compared to Howard's fund. You know, I mean, the miners are definitely rallying, but it looks like they pulled back more. I mean, Howard's a beast. Howard's the GOAT. Howard is the GOAT. Ever since I started doing the show, the Daily Factor and the Max Factor, that Howard's funds win a lot, and so does Rex. But because it just the Daily Factor and my Max Factor metric is just kind of heavily weighted towards steadiness and consistency and everything. But yeah, those are good funds. GDXW has performed well. Let's compare GDXW to GDXY or something, or to K Gold. Yeah, it has. My dumbass sold all of it. I mean, I did well for a while because it pulled back further than where I sold it. But anyway, I bought K Gold with it, so it's fine. But man, yeah. All right. Let's see. GDX. Yeah. Well, I've heard it's leveraged in the fact that I didn't know if it was directly leveraged or. I heard that, you know, anytime you play the miners, they're like because they're processing gold. It's like a leverage play on gold. So of course, if gold goes up, miners do too, but the stocks do like better. You have convexity or whatever in that. Yeah. Oh yeah. No, I didn't sell K Gold. I sold GDXY like a dumbass, but I bought K Gold with it, and K Gold's doing well also. But no, I bought GDXY when the market was pulling back in April as a hedge, and just left it on. It was like my third biggest position. But then at the end of October, when I thought the market was high and I rebalanced my portfolio, I sold GPTY, I sold GDXY, and I sold a little bit of ULTY also to lock in profits because I was up a lot, and I figured anyway. I figured the market pull back. Yeah, you're right. I sold. You're right. I'm sorry, Mayor. You're right. I did sell GDXY because GDXW wasn't around in April. I mean, GDXY was the best one available at the time. Yeah, I might not buy it again this time, but at the time in April when the market was, I think I bought it in March when the market was crashing. When I sold out of my Misty, and I had to divest of the single stocks, and I took what money I had left and I bought some GDXY with it and did really well. Yeah, no, you're right. I get you. GDXW has leverage, of course. Yeah, and of course it does better. Of course, yeah, I love GDXW. I don't have any of that, but I wouldn't have a problem getting any. Yeah, no, I know that's a good one. I get you now. I get what you're saying. I thought you were talking about miners have leverage on gold, and they do. I mean, the miners, and you could tell in the volatility, they have higher volatility and everything. But yeah, GDXW is awesome. I'm with you on that. We'll pull it up right here. Yeah, they have leverage and they don't sell upside really. Not in the same way a covered call fund does. Yeah, it's a good looking chart. All the round hill 125 on. I've heard. I think they were 120 or something. I think the W funds. I think that's standard, isn't it? It's been a while since I've looked, but I'm pretty sure that's standard. Yeah, KP. Yeah, that one is Palladium, or no, it begins with a P. I forgot what it was. Platinum, right? It's not platinum. What is it? It's yeah, it's platinum. It's got to be platinum. Well, anyway, it hasn't come out yet, but yeah, no, it's anyway. Let's see. No surprise, GDXW is right on top of GDX, and I bought it in inception. Yeah, that's awesome. That's a good move. It's a double good move because it was a good. You made the most important decision. You picked an asset that's going up. I mean, an underlying that's going up, and then the second most important decision you made, you chose a good company too. I mean, I'm with you on the ticker, but heck yeah, I mean GDX, that's awesome. That is a good ticker. That thing, that's probably the biggest winner, one of the biggest winners of the year, I would imagine. Gold miners, maybe Google also. I mean, but if you look back at the year, I mean, my Lord, this thing, where was it a year ago? 39. It's more than doubled. I mean, that's incredible. That's been a heck of a run. That has been a heck of a run. Let's look at, let's do it this way. GDX actually, W hasn't been out that long, so this probably won't tell us that much. But yeah, look at that. That's how that 20% leverage works. Of course, you could see it was working on the way down too, just like it's supposed to, but it passed it right about here. It's been, it'll stay ahead as long as the market stays up. But yeah, so man, yeah, that was a good buy. So GDXW came out October 30th. I bought some stuff October 30th also. I should have bought this one. Or actually, that's the day I sold all that stuff. I think I sold a bunch of stuff and then bought some more stuff the last day of October, just because I thought November would be terrible. And it has been until the past couple of days. I still don't know where, hang on. I want to find this one thing. Nicholas Funds, portfolio rebalance. ETF performance dashboard. I think it's this. Let's check out the let's check this out. Is that it? Is that the latest one? Yeah, that's it. I mean, so this is since inception. We just looked at this on the other chart. Man, the SPY's almost up. That it's been a heck of a turnaround. Qs are still down, you know, from the last day. This is from October 30th. This is from the day you bought GDXW. Man, GDXW has done a lot better than any of these dogs. Here's the yield, of course. ULTY, the highest yield. LFG, of course, the yield max stuff and number one on the yield. That's the way it works. Round Hill pays good yields too. And also, to be fair, K yield and ULTI they're a payment behind because they didn't pay for the first 2 weeks, but probably they paid double. It's probably the same difference. So no, they probably actually that's not right. The ULTI is behind. There's no way it's going to pay that much less than ULTY, in my opinion. I think that just they got started a week late, so they have a little bit in reserve or whatever. And same thing as K yield. K yield really will pay this. I mean, you know, they're going to pay less on purpose, but Rod's in the house. Hey, Rod, what's up? 0-0 right now in the ball game I'm watching. What's the best gold trade to trade options on? I don't know. I haven't traded any options in that in a long time, since like 2021 or man, I usually just trade in I usually trade NVIDIA, the Qs, the SPY, just the biggest ones. I don't know if I've ever done a gold option. I probably did in 2022. I did some gold futures. Anyway, GOOW is turning a monster. Don't have any thoughts. Don't have any. Are you? Oh yeah, I don't have any except through WPay either. Just like you. Heck yeah. No, that thing has turned into a monster, and that makes the case for fund to funds. Next month it may not be that hot, but it'll still pay a yield. And then maybe next month something that we can't even conceive of right now takes off. I mean, I love the fund to fund approach. I don't have time to choose all those. I mean, everything Round Hill puts out is pretty good. I feel the same way about YieldMax. They have Murney, but other than Murney, and I mean, you know, I mean, I'm down with having, you know, with taking a shot on any of those stocks, Reddit or whatever. In other words, they try to use growth stocks with high IV. Both companies do. So there's always going to be a dog or two in the bunch, but there's always going to be a couple of winners too. Brad likes GDX, yeah, for trading options. I really don't know. Gold has 138 billion. We could, I mean, let's go look at. Let's build a gold covered call and see what the liquidity is like. Or covered calls. I mean, but I guess so. I mean, might as well. Naked. I mean, we could do a naked put. Same difference. Okay, but let's see here. Bid 480, S 550. This one, volume's only 4. It doesn't look like it has a lot of volume, but it has daily expirations, it looks like, or, well, Monday, Wednesday, Friday. Yeah, it has Monday, Wednesday, Friday expirations. It looks like it has decent liquidity, but maybe you have to go out to the monthly expiration to get the good liquidity. Probably so. Yeah, here you have 1,900 volume and 100,000 open interest. Yeah, and here bid at 745, asked at 770. I mean, I've seen worse. I've seen worse. What is this? A $757,000 or $757 credit and a $38,000 loss. Let's just switch this to put and do the same thing and forget about the stock. Why do they want to charge you? Oh, you only have to, okay, that's right. Because margin's only a quarter of what you can lose. The max loss is the same. It's you could 38,000 or whatever that last one was. But this is like 1/4 of 38,000, I bet, or whatever that max loss was. But anyway, I like to look at this. I like to do this. You'd be surprised how many times it's a lot better deal just to write the put and forget about the stock. But you guys know that because you guys do the will. But I think writing the put is always better than having the stock. You take the money you save and put it in T-bills, just like an ETF would do. But anyway, so watch this. Here's just the put. We'll use the 390. Okay. We'll use the 390. Then we'll go over here to this one and buy the stock. Gold. Let's see. Oh no, we'll go. Here's the stock here. Add, buy gold. All right, so there's a covered call right there. You get $757, but you tie up $38,000. I guess the thing was, if you bought the stock on margin, you could buy the stock for like 7,700, right? I mean, and then you could sell the option. So when you do the put, it's just that you get a bigger credit for the same option, same risk and same reward, but the margin's only a fourth of the price. Anyway. All right. Yeah, I didn't see that. Well, that would help. That would help the Horns out. Who are you guys for? I mean, I know Chad's for the Horns. I'm in Austin, and I'm a Horn sympathizer when they aren't playing the Sooners. And I'm not big on A&M. I mean, I don't know. I used to like A&M when they had Sumlin. I really like Sumlin. He was a coach at OU and a really good. I always thought he was a really good guy. And but ever since they don't have him anymore, I'm not a big fan. All right, if I'm interested in gold and silver miners, is their CEF. I actually thought I saw that when I was punching in, when I was getting ready for the show today. I was trying to punch in CEFS, and I think I punched in CEF, but CEF was a Sprott something. Oh yeah, exactly. No, it's so weird you should say that, because I saw that today. I was trying to find CEFS and I didn't type the last letter, and I saw this. I was wondering about this. So can you sell options on this? I mean, it's obviously in a bull market. Let's look and see if they have liquid options. No, look, they just have quarterly expirations. I mean, they might be liquid. I don't know that, but I'm just saying. But yeah, you could though. I mean, let's see what a net the money call goes for. Bid and ask. Bid at 0, asked at 70 cents. I mean, anyway. I would say that if I sold it, I would want more than 0 for it, I think. I mean, if they're going to give me 0, I'll just keep the darn thing. I mean, Oh, did he? I didn't see. I wasn't watching that because I've been talking with you guys. Okay, and Texas kicked a field goal. Okay, well that's cool. So yeah, I hear you. No, that's a good one. Yeah, CEF is a good one. CEF is a good one. All right, so let's look at this. We can look at this, and I'll let you guys go if you don't have any questions. I'm going to go make a turkey sandwich. But let's check out stock tools just to cover. I know that I talk about YieldMax a lot, and well, not just YieldMax, but X funds and Defiance and also a little bit about Roundhill and stuff. But we need to check in here to keep it just because this one it has everything. Let's see which ones are doing the best out of everything, not just the ones I like. What I'm saying is my graphics are built for the stocks that I follow. Or ETFs. But let's see what we missed. This list is usually chock full of Roundhill. Not that I don't root for Roundhill, but I root for the WPay. I don't follow the individual ones, but I guess the better the individual ones do, but the better WPay does, obviously. All right, sure enough, true to form, AAPW is that number 1, and let's see what the time frame is. MST's number is last. That must be for the month, yeah, down 59%. Wow. Now MST had didn't they have a really good day the other day? I mean, obviously they had a huge day. I'm trying to think what day that was. Even in a down market, lots of times you'll get snapback rallies. All right, well, let's see what's going on. SB's Ole Miss won today. My Sooners play LSU tomorrow at 3:30. Okay. Number 1 on the day is COIW from Roundhill. Number 2 is CO2. That's good. Number 3 is Morrow. Number 4 is METW. Number 5 is YETH. Ether had a big day. YBTC, AMZW, Carvani, SEPI. Let's check out for the week now, because it's been a massive turnaround. Let's see for the week who we have. Probably gold's got to be on here for the week. I mean, it's gold and silver. There's got to be some gold and silver on this list. We should have had gold and silver. Maybe we'll do gold and silver Saturday tomorrow night. All right. Yeah, for the week, look at this. HOOW, AVGW, and Maxi. Wow. I mean, Bitcoin has had a massive bounce. And who has IBIT right now? I'm trying to think. Is it Alti? Somebody made a massive bet in IBIT. I think a couple of the funds have IBIT. All right. Well, of course, Blocks has been doing super. Blocks doesn't have IBIT, but they have HODL and, I'm sorry. I do this every time. Anyway, at least I'm narrating, though. Every time I go to that one, because it's on my own screen. But, yeah, this is amazing. Look at this. This is for the week, 23% for HOW, 22%, for AFGW, Maxi, Blocks. Look at Blocks, 17% on the week. Where the underline was up 7, that's some convexity right there. But all of them are beating the parent. Roundhill beats the parent by about 20%, and on a week, that's how it's supposed to work, 20% a week. And sure enough, I bet if you took the difference, that'd be close to 20%. It looks, it actually looks more like, it looks higher than 20% to me. But anyway, whatever. They're doing a great job. TSLW's even getting a piece. YETH is up 12% on the week. BTGD from Quantify. There's 5E. 5E's having a good week because it's it's 40% uncovered. I bet 5E's beating feet just because on the way up it should. On the way down, it probably shouldn't. We'll see where feet is. There's feet. Feet right there is up 7.92. That's good also. SPY's only up 3.7. It's doubling the SPY. Yeah. Heck yeah. Look at Baggy. Baggy making 7.5%, same as the index. BTCI making 7%. That's from Neos. Chippy's right there. There's Chippy and Soxy always doing a good job. Or lately semiconductors have been hot. Soxy and Chippy have been some of the better ones. Feppy's a good one. Look at that. It made 50% more than its parent did, or 40%, 35%, something like that, whatever. Tesla and Tesla, heck yeah. Tesla doing all right. MS2's hanging in there. So yeah, MicroStrategies, I guess, has been getting better, obviously. But yeah, if you look at it on the one, let's go to the worst for the week. All right, I hit it too many times. Here we go. The worst losers of the week. Fiat. I thought that said feet, and I thought feet was doing pretty well. Anyway, yeah, Fiat. Yeah, of course it's inverse, crashes inverse, but I missed as long, and it lost on the week. YQQ's inverse, Winter inverse. What's that one? NVYY's down on the week. I guess NVIDIA didn't have a great week because even NVDW they're all down. Okay, well, whatever. You can't win all the time, but there was a lot of green on the week. I mean, look at it. Even XYLD got in on some of the green action, up half a percent. Huh. I think that's pretty interesting. Why can't Defiance make a decent gold? I don't know. I don't really follow that one, but I've looked a couple of times too, and I'm glad I have K Gold. I mean, K Gold's a monster. Then GDXY did well also. But yeah, I definitely would have got GDXW had been available because I was just looking for the best gold coverage. And at the time there was no In fact, Defiance didn't even have that GLDY out yet. I'm glad I didn't get it anyway, but I don't think they had it out yet. I mean, there's been a ton of funds that have just come out in the past year. Anyway, let's see. I mean, Defiance has kind of the same thing that YieldMax does. They pay out maximum. So they're, unless their underline's in a massive bull market, they're going to be hurting on NAV. And you can see here, even with their underline in a massive bull market, they still managed to lose $1 NAV, which I don't think that's too bad when they pay. But I mean, whatever, but it's still not ideal, especially when you could have K Gold that actually over the same amount of time was actually up in NAV. Now you only got a third of the dividend. I mean, but that's kind of the way it works. But heck, yeah. 62% annualized, 23%. I mean, yeah, Gold Y is doing all right. But yeah, so even forgetting about K Gold, Howard's a different breed of cat. But let's look at iGold and Y Gold, and let's look at some other ones. It looks like iGold's doing better than K Gold is, really. I mean, on that chart, it did. On that chart, it did. Let's see if it is. Oh, no. K-Gold's got it. Yeah, I mean, iGold's doing a good job. I mean, its NAV's gone from 22 to 25, 22 and a half to 25 and a half, basically. That's pretty dang good. This one's gone from 25 to 29 and a half. It's about the same. Looks like iGold paid a lot smaller dividend. Well, they did because the price is about the same and they're paying half the dividend. All right. So you have GLDY, you're thinking selling it, total return is fine. Yeah. Share price doesn't go up. Yeah. What's the yield on it? Probably super high. I bet the yield's at least twice as high as K Gold. That's why, I mean, like I say, the only thing you need to know without knowing anything else, just look at the yield of a fund. If you want to know how the NAV's going to do, look at the yield and look at the underlying. And, it depends. It's pretty much totally dependent on both. But let's look here. I guess let's go. Let's look at K Gold and Gold Y. I mean, I know that because that's just kind of their brand. Defiance, they use leverage and they're into the max pay model also. But let's just see exactly how much it is. So call it 850. It's going to pay about 850 over the course of a year on 18. So that's not super high. It's like 45 or something. But K Gold is like, I mean, what's K Gold going to be? So it's $1.10 on so about $3 over the course of a year, and it's cost 24, 15% or something. So yeah, it pays twice as much. It looks like this one's going to pay 35, 40% or something. So it has to come out of somewhere. It comes out of the NAV, or it's not only just because it comes out of the NAV, it could also be to achieve that type of return. They're moving their strikes a little closer. I mean, it's the whole, obviously that's why I got some flag. I got a comment the other day on Twitter and somebody said, you're not right. These ETFs, they pay the distribution for the options. I mean, but I think, yeah, that's kind of true, but it's a lot bigger. You have to understand how the whole thing works together. Anyway, but yeah, that's the main difference between those two. So, I mean, but I do think Howard's a good manager too. I'm not saying that, but I bet you we would not ever really know unless Gold Y lowered its dividend to be the same as K Gold. If K Gold still beat it, and it might, then we would really know. But with the dividend being higher, we would expect Gold Y to have worse NAV performance. Okay, you've been bugging Roundhill to release SMHW. Yeah, the Trax SMH and the Triple QW. Okay. Yes, equal. Or is that the equal weight? Are we talking equal weight? Just like the RSP? Well, that was a heck of a catch. Heck yeah. Heck yeah, man. Yeah, some equal that would be good for a pullback or whatever. It'd go down, but probably not as much as the, you know, GLDW is better than well, of course, yeah. I don't doubt it. GLDY is an example of one that pays so much yield. The NAV is but yeah, I know it is. I know it is, and it's the same thing though. I bet GDXW pays a little bit less yield. Not like, but I bet it pays. If one of them pays 40, I bet GDXW pays 30. But yeah, it has better NAV, and there's no doubt it does a better job. We were just looking at GLDY just to see how it's been doing, but it's kind of an example of what not to do, in my opinion. I've been. Because when I bought GDXY, then after that, GLDY came out, and I saw it paid a higher yield. So I've been keeping an eye on it. But so far, I've been glad that I had GDXY and not GLDY. But GDXW, of course, you can see how the leverage working for you. I mean, it gets crushed when the market goes down, but whatever. But it's doing great. Heck yeah. Oh yeah, let's look at the yield though. So $1.50. Okay, well, it's been such a short time, and it's just hard to tell. But it's hard to tell. I bet you it pays less. Anyway, K Gold beats IAUI. I'll sell it and put it into Curve. Well, IAUI is a good one. The other thing is just because we're watching something that beats something, lots of these things have only been open 3 months and it's winning over 3 months or 6 months. So, it may not mean it keeps beating it forever, but I hear you. Some of these are just kind of a bad look. But yeah, IAUI is one of the better ones on the Max Factor. It's always right close to the top. I think that one and iGold seem to, and K Gold also. But IAUI is a good looking, but we're basing something on a third of a year, and yeah, it could have been the perfect condition for K Gold. It's just that, the perfect storm or whatever. And maybe this one would be a better one over the course of a year. So I'm just saying, be cautious. I think I've heard great stuff about IAUI. I don't have any problem with that one. Anyway, there are semiconductors in the NASDAQ weekly. Oh, that's right. SMH, of course. I was thinking equal. No, of course. So SMH semiconductors. Yeah. I'm surprised Round Hill doesn't have a semiconductor one out yet, like a Soxy or a Chippy. That's a good point. That's a good point. Hopefully they'll be responsive. Round Hill offers QDT. QDT is one of their. That was when I first started liking Round Hill. That's a really good looking fund. And it's a really good looking fund. I like that one. All right, guys. Well, if there's no other questions, I'm going to go make a sandwich and watch the rest of this game. It's 3-3, and it's midway through the second quarter, so I'm going to watch the rest of the game. But man, we talked about everything we need to. Okay, so be watching for shows. I'm going to have my Diversified Diva show on as soon as ULTI posts their trades for the day. I'm going to do that short 10, 15-minute show where I talk about the option trades on, K-Yield, ULTY, ULTI, and blocks. So that'll probably be on tomorrow morning. And then also tomorrow I'll have on the top 20 Max Factor show, ETFs of the week. And then tomorrow night I'll do a live stream, and it'll probably be SPY Saturday where we look at indexes, or it might be Precious Metals Saturday. I haven't decided yet. Precious Metals would probably be good. SPY's kind of boring. Okay. I'll copy the link. Okay. Yeah. Give it to me. And I'll go look at it. You're talking for the SMH? Heck yeah, I look at prospectuses all the time. I have 4 or 5 of them open right now in different tabs, but I'm trying to see if you left me the link yet. Okay, you haven't left it yet. Anyway, I look at prospectuses all the time, but I haven't seen that one. I've been reading prospectuses till my face turns blue. And also, I finally released a video on GIAX in the lightning spread funds, GLDN and weapons and whatever. But anyway, I have a couple new videos coming out tomorrow, and then I'll have a live stream. But other than that, I'll be in Twitter. Or not Twitter. I'll be in Twitter. Yeah, I'll be in Twitter, and I'll also be on in Discord if you guys need to get a hold of me. But yeah, Andrew, send me that link. Okay, well, I'll just look it up. Watch. I got Google. SMHW? Or are you saying they should make one like that? Let me read the message again. Paying funds that haven't released yet. I've emailed them. Oh, you've emailed them and called them numerous times. And then you say, Max, copy this link. It didn't show the link. It doesn't, I think it doesn't let links through or something. But anyway, that's fine. So it is SMHW. All right, Round Hill Investments Perspectives. Here it is. Yeah, I have a Round Hill one open right now. I forget what it's for, though, but they always do it different here. Okay, so heck yeah. Oh, we got some emerging markets. Oh, it's on the wrong screen. I'm sorry. At least I remember now. At least I remember. Hang on here. All right. All right, yeah, here we go. So you got GDXW, TSYW. Yeah, that one's out. Okay, that one's out. I haven't seen this one, the VUW. SMHW. Okay, I got you. Kick ass. They have the Dow, emerging markets. Wow. Ether. I mean, this is awesome. I hope all of these go in the W funds, but I don't think the W funds are going to include commodities and stuff. So I don't think the W funds would have these bonds. And I don't think they would have some of the other ones. But yeah, that looks awesome. Thanks for that tip. I'll review that. I'll review that this weekend. I'll save that there and I'll read it and make some content on it. Yeah, this is good. I mean, this is good. They're probably going to say the same thing. They just have different names, but additional information. I bet you if you read one, you're going to. Investment objective is to pay weekly distributions. Second is capital return. Or wait, second is what? To provide calendar week return. Oh, yeah, 1.2. Okay, 1.2, whatever. So though it's leverage. It's just leverage. I don't even think they use options. It's a total return swap. Yeah. Yeah, this is easy peasy. This is easy peasy. Okay, anyway. That's a good tip. And yeah, I'm looking forward to some of those. I think that VUW might be cool. I mean, I've never heard of them having an income fund based on the VU. I mean, that's awesome. And they had an income fund based on the Dow 30, it looked like. Heck yeah, that looks awesome. I agree with you. I think they are. How much, let's see here. I'm trying to get stock analysis open. All right. I was trying to look at how big Round Hill is. I mean, they're getting big. Global X is 15. Direction is 16. I didn't mean to do that. Van Eck Capital, ProShares, Wisdom Tree, Global X. We talk about that one sometimes. Innovator, they make all those buffer funds like T-Jewel and stuff. Grayscale, of course, Bitcoin Trust, Flex Shares, Aberdeen. Alpha Architect owns Chaos, which is a really interesting fund. Neos, of course, you guys know that one, and Amplify. Here's YieldMax number 37. So it's a little bit smaller than Neos and Amplify, about the same size as Simplify, and then or Crane Shares, and then Granite's getting big too, and about the same size as Granite, and then Round Hill's right there. Okay, well let's see how many million they have. But yeah, all of these could be good for their. I mean, if you're looking for what they're selling. It just depends on, All right. Look at Defiance has 6 billion. All right. Defiance has 6 billion. Round Hill has 9. Granite has 10.4. Simplify has 11. YieldMax has 12. Simplify almost has 12. what are they selling to people? I mean, SFOL maybe. I mean, anyway, Yield Max, we know what they're selling, Misty and Alti and others. Then we have Neos. Of course, they're selling Triple QI and SPY-I. Yeah, that's pretty much, those are the ones we talk about. I mean, and then of course, Innovator, we don't really talk about too much. And it looks like the big daddy in the alternative world is Global X. You know, I wouldn't really call JP Morgan's fund alternatives. I mean, those are just blue chip, you know, funds. But anyway. Yeah, but I agree with you. I agree with you, Andrew. The one you want most is SMHW. Yeah, semiconductors, of course. Tracking the semiconductor. Yeah. So it should be like Chippy plus 20% or Soxy. I forget which one is the one that has the higher yield. It's Chippy. Yeah. So it should be like it should be like Chippy with extra upside, I bet. No, that's going to be awesome. That's going to be awesome. All right, guys. So I'm going to get out of here and go get something to eat and watch the rest of this game. But I appreciate you guys for being here. And I will talk to you guys tomorrow. Have a good evening.